Hey guys, what's going on? Let's take a look at this price action today. Awesome setup, really looked really nice. We kind of played around a little bit in the morning and then we fired right up for this Tuesday. So let's go ahead and take a look at it, how the layout is on the charts, how the support and resistance was actually set up, and then how we also used the Fibonacci's in order to find the target and where it was going to go. So let's go ahead and get into it and show you some pretty good options when you are taking a trade and why you kind of want to use this setup. So let's go ahead and jump into this 15-minute and take a look at some price action here and see what we got. So again, you know, Carbur.com is where we get our levels. So you have a level here for your breakout trigger. You have your breakdown trigger right here, and then you have your daily support down here. Now, where you might be wondering, hey, where's that daily resistance? I've heard him talk about this plenty of time. Well, it's way up here. So when you're looking at measuring, you've seen us do this before, right? So I'll click on the breakout trigger and go all the way up to the daily resistance. Well, it's 3.36. That's crazy distance. So a lot of times when you see this, it's considered an exhaustion move, so you're probably not going to really see the move run up. It's probably in a higher time frame that it will move. You can see if we go back on yesterday, remember, it just went straight all the way up and hit this, basically hit the brakes around that 70,000. That's what we were talking about before. Did you get the entry? No. But today, we price action drove back down here, came down in this lower area. We got a double bottom here on the 15-minute, and then it ran up very nicely up into this area. Well, you might wonder, like, okay, what's this noise here? And what I did is I took the Fibonacci and I just marked the distance between the triggers, and then it sets the levels for you. So obviously, here is the morning open. Here is the candle from the New York Stock Exchange open. So a lot of times we don't really want to trade for that. You can see it went on down. It did get the close, and we did get a nice little drop. You're waiting for it to come back up and get you in. Now, one red flag here is the one thing you got to be careful of is really you want to get past the predator line. The same thing with here. You want to get past the predator line here if you were going to trade it on up and look for aggressiveness in it. It's up to you, though. If you got into this and you got hurt, well, that's trading, right? I mean, that's what we're saying. Nothing's ever perfect. So you might be like, hey, I'm going to get in this. It's right on the open, so you have a volatility candle. That's where I would say be careful, because it's 8:30 in the morning. That's the energy that kicked in and got this movement going. So there's a movement candle. You might want to wait to see, like, okay, is this actually going to grind and hold down here and fall and take this lower area out, or was this movement candle just a lot of energy, sucked up all this money right down here that was from the early morning? You can see it dropped right down in there, and then it started to grind up. So that's how I looked at it. That's a strong way to look at it. Now, if you're looking at getting in, there's two options here. You could put your stop below the 30-minute low. Now, that 30-minute we're getting is the first candle open here at 7:30 Central Standard Time. So that's 8:30 Eastern Standard Time when the New York Futures opens. A lot of times that's, you know, you got to set some standard somewhere. That's where we decide to set it. You can see price action constantly always plays in this, very consistent. That's where we marked our 30-minute high and low on this 30-minute candle in the open. So this is really this candle and this candle back here, because these are two 15-minute candles, 30 minutes, right? So you have your bottom, your top, put your stop down there. You enter on the trigger. So you might be like, okay, well, I want to get in. How did you get in on this? You had to wait for this 15-minute candle to close. Yes, that's the problem, right? So you waited for this to close, and then you're actually in this candle right here. And now you want to get in. And you're like, well, I want my stop to be a little better. Yeah, so put it down below that 15-minute candle that closed above the trigger. Use that bottom, the lowest point of that candle, to put your stop. So there's where your stop can go. Then you're looking for strong movement. You can see we have target 1, target 2, target 3. Now, you could run this all the way out and see this. Now, this came in and played right in this area. This would have been a good area to get out. That's really a target 4. So you have target 1 right down in here, then you have target 2, target 3, and target 4. This is a pretty good area to jump out, or even right here is a good area to jump out. Now, you might be kind of bummed out because you're like, it's not that great of a trade. and I don't disagree with you. It's not the best trade, but market is moving, and it does give you some potential to get in. So really, let's go into the 5-minute and take a look at this for an entry. You can see here is that 15-minute coming up through the break. Gets all of you and get the close here. So this is the candle that you're sitting in, that you're looking at getting in. Now you could be aggressive in here if you wanted and say, you know what, since the close up here is so high, I'm going to go ahead and take this a lot tighter. So you could do that. That's up to you as a trader. That's aggressive, I'll say. The more sound route, if you want to be a little more aggressive, is use that 15-minute, or be safe and use the 30-minute. To me, you know, I like to find opportunity in the market. I'm okay to play a little safe. So I would either play this level or this level. You know, it's nice to get more movement, more profit, but it's no fun to have a whipsaw down, take you out, and then rip. That is your entry, though, right there on the 15-minute or 5-minute, sorry, from that 15-minute candle close. We're looking at getting the entry. You just put it in here. Yeah, it broke below a little bit. You could have got a little bit better, but that would have been a clean trade and a clean entry. That's what you're looking for. Like I said, where you want to put your stop. And then this is running up. Now, this could run all the way up to here. It's up to you if you wanted to wait. Obviously, you're still live in this trade if that's the case, and it hasn't come back down and said it wants to go down there, but you are asking a lot. You're waiting for the higher time frames, the 1 hour, the 4 hour, the daily, the 15-minute was this move. This is what you're typically looking for in trades. So you trade the time frame you decide to do. We're looking for a 15-minute trades when we take these trades. So that's all the setups. We're always looking at 15. Sometimes it's a big move in a 15 minutes. Sometimes it's a smaller move. But in the end of the day, if you're taking it off right in this range, if you were a little more aggressive and said, hey, it's going to go up to target 4. That's a little more aggressive, but you did have this big expansion that it could come into, and it definitely was saying it's going to go up. So this area up here could have easily been eaten up. We all know that the magnet of 70,000 is calling for this, so this easily could go up to that higher level here, and we could see it take out this strong area. But again, when we're taking these trades, it's a lot nicer just to get out, go enjoy the rest of your day. Yes, it ground around, and it could have fired anywhere and watched it go up, but I mean, green in the account is how you grow. This easily could have bleeded all the way down and picked you out. So remember the time frames you're trading. So that is the crazy trade, though. That was the opportunity. It was a little over 1-to-1 on the safety style, putting your stop and taking out a little more conservative on the move. Obviously, if it went a little higher for you and you're a little more aggressive, or however you're managing those exits, you could have been a little more aggressive with this type of trade. But regardless, you know, a 1-to-1 roughly, so $100 on, $100 off for easy math here. Not a bad deal for you. So there was opportunity. The system set up for you. It did ask you if you wanted to take that opportunity, and you could get in. And there it is. Ran up, easy trade, consistent. Tuesday, Wednesday, and Thursdays are always the higher energy days. You're definitely going to see this. The weekend, you usually don't see this kind of move. Monday and Friday do have a lot of movement because, look, let's go back out to the 15-minute just for ease. But look at this run here. That's Monday. This is Monday. So look at this big run to this big run. What's the difference? That big run did not give you an entry opportunity. This did. This said that you could take this trade today. So stick with your system. Sometimes you have to watch the price action move crazy. Other times you get to just take advantage of it. So that is about it, guys. The only thing I'll point out real quick is this Fibonacci. This is obviously you can't get that anywhere. It's a free tool, but it's set up. Everybody has it set up different. So if open up mine, if I just say let me actually change that back to what I had, and we could show you how to do this. We could do save as, and oops. Let's put my fib. And that way, because I don't want to overwrite something I had. So you can see I put my fib in here. Now I can say restore the defaults, and this is what yours would look like typically in the settings. So now if we want to change it, let me go ahead and open up now my fibs. You can take a screenshot of this if you hadn't already, and then there you go. There's all the levels. You can start up here and go through them. If you mark it up like mine, it'll look like mine. You can choose put the colors like mine. It's up to you. You can turn on the background if you want, if you like it to have it shadowed or not. But then when you're done, make sure you do save as, and then do like what I did as well. That way it's set up and looks clean. Then you click OK, and then there you go. You have them on there. And then next time you draw them on there, you can just go choose the option that you want, and you can mark out your levels. It's pretty easy. So little tidbit there for you if you wanted to kind of find the levels. This is the levels that we chose because I know there's institution traders, there's hedge fund traders, there's banks and stuff that trade in the market, and they a lot of times will use computers, and computers set certain levels. That's why ours is a little bit off a little bit. The other thing is we're using measured moves. This also falls in that. So really these levels are why we chose. Now you can choose your own levels. As you saw when I went to the default, it had its own levels. What I try to avoid is common. When I'm looking for targets, I try to get away from the common system that everybody else is using, because a lot of times price action will come right to that area and then fail. That's because everybody's trying to put their stop there, and if everybody's going to have their stop there, then the market may not even go up all the way through it. And how many times have you seen it go whoa, right there and then fall, right? That's because everybody probably had their stop there, because that's the defaulted system. So that's why I don't do that, and that's why you see my levels where they are. So, all right, guys, go ahead and like and subscribe. Ask questions again in the comments. Reach out. Some of the stuff that I've been going over is some of the questions that are coming up from people. There is high liquidity in here. This is a higher time frame indicator that we do have, that we use. We do on Crypto.com. We have our indicators in there, and we can share those as well. On there, you can get them, and a lot of people within TradingView do use this outside of even Crypto.com, because they like to see the liquidity levels on the higher time frame. So this is your 4 hour and your 1 hour written in here, and it's telling you kind of where the money is sitting. So you can see it's definitely up here and up here. We're sitting a little bit down here, but definitely the market wants to kind of go up in this area. Now this area up here is important. Remember, if we get through this is that sauce that we need to see it get through to start being a little more bullish. So I'm getting a little more excited. I'll waste a little more of your time, if you will. I'll go out to the 4 hour or the 1 hour right here. We're a bullish. We've been bullish most of the morning and into the afternoon, because we're above this 21 again and this 200. So the 1 hour looks really good. The 4 hour right now definitely has rotated itself and showing aggressiveness push on the 21. The 200 is still coming down into this price action, but you can see it's starting to want to kind of flatten out a little bit. So this could easily spike up through here, come up here, and then fail back down into this area on the 4 hour, and then grind over the next 2 or 3 days. So we'll see. This is positive, right? Like, we're looking to get both of them, get the 21s across through the 200s, so on and so forth. That's what we're looking for, really get bullish. But we're starting to grind that way, and that's what we need to see. If this is going to happen, we need to see this. Right now, the 1 hour is basically full bullish, because we're above both moving averages, and the 21 has crossed through the 200. So the 1 hour has done what we've been asking. It finally has done that. So now let's ask the 4 hour to do it. Now, if 4 hours is going to do it, then let's go on up to the higher time frame. Let's look at your daily. The daily is getting a nice 21 crossing back under. We can see we've rejected, then we ripped above it. Was a nice rip above and close, and then now we just opened up the next candle and it opened above. So let's see if we can get this push on up. Now if we get the 4 hour set up the way I was just talking about, then we can go out to the daily and really look at that. Right now 96,000 is about where that 200 is sitting. This could grind on down a little bit as this starts to go up and start taking out key levels that we've been talking about. This is how this is trading. This is how you want to lay out your charts. This is what you want to be thinking about. This is what's going to open up your mind on what's going to happen and where things could possibly go when you're sitting down in here in this lower time frame of, should I take the up trade or the down trade? that's what we're talking about when we say bias and energy and where things can go, is everything I just talked about. So I know that was quick, short, sweet. Looking at the high time frames, I know everybody wants to know the levels, what's going to happen. That's it. So keep it simple for yourself. Let's trade simple. Let's look at charts simple. I know there's a lot on my charts right now, or it looks like it, but really I could close a lot of it out and it wouldn't really need it because we already used a lot of it. Like this, I don't need them anymore. I already figured it out. This I'm not even using right now today. And then here's my key levels. You can see we're getting pretty cleaned up here. And then now it's just this basic chart. So we really don't need it. I mean, to me, all this means something. Maybe to you, it feels busy and there's a lot going on. But these are all key levels that actually help us take action on price. So it's not busy if you understand what it is, and then you have it on there for a reason. So FYI, set up your charts. I know we try to keep it simple. Cross the line, cross the green line, cross the purple line, gets to close on the 15-minute, go down to the 5-minute, take your entry, put your stops where it needs to be, put your targets where they need to be, sit back, enjoy the run, make some cash. So that's about it, guys. We'll see you in the next video, and practice. That way you can see these price action and be able to take advantage of it. It is life-changing if you get good at it. There is opportunity. It's no different than running a business. You buy the product good, you write in your cost, all that good stuff, and you make yourself money month over month. That's no different than trading. So treat it, every single trade is like buying something and then reselling it. It's like buying a product and selling the product. Buy the hat cheap, sell the hat for a little more, make a little bit of in the difference, get your paycheck, all that fun stuff. Entrepreneurship, right? So, all right, guys, we'll see you in the next one. Talk to you later.